Welcome back, guys, into another weekly recap. This is the week of from the 25th to the 29th of October 2021, and we're going to do, of course, our usual pair on gold, Bitcoin, EuroDollar, GJ, and of course, have a look at the dollar index itself. So let's start with an overlook of what was the main data, main reports that came out this week for the main pairs that we trade. So on Monday, we had some minor German reports showing mixed data. As you can see, some worse than prior, than expected, some better, still worse than prior, worse than prior, worse than prior. So not good for the. Just wait a second. Okay. All of them was than expected and worse than prior. So negative news for the Eurozone. And we had on Tuesday home sales, which came out better than expected, better than prior. And we had consumer confidence that we saw it on the Forex Factory was much better than expected and much better than prior. I'm going to show you. Let's see. Here, then we had on Wednesday the durable goods orders, which came out better than expected. But since the expectations were buffered a lot, as you can see, the difference between the expectation and the previous data was large. So it was more probable that it would come in between, and it was better than expected. Therefore, and the non-defense capital good orders better than expected, better than prior. Then we had some ECB talks. On Thursday, we had unemployment rate for the Germany. We had the interest rate decision for the Eurozone, the consumer confidence for the Eurozone, which was as expected but worse than prior. We had better industrial confidence than expected and then prior. And of course, we had the monetary policy decision statement, which was kind of neutral. Okay. On Thursday, also we had the harmonized index of consumer prices, which is the whole Eurozone CPI, not the single country, not divided by single country, which was higher than expected, higher than prior. We had the GDP for the USD, which was this one, sorry, which came out much worse than expected. And the expectation was already a lot lower than prior. And we had the jobless claims, which came out slightly better than expected. And as well, the PCE came out, which is the a more dynamic form of CPI used mostly by central banks, therefore is very important, came out here much higher than prior, but much higher than expected, but still lower than prior. So if I'm not mistaken, should be a bullish conference for the dollar. And on Friday, to close off the week, what we had the GDP of some main countries, Italy and France, Italy, and Germany, and we had the overall. I don't know why it's not working anymore. Why is it working? and the GDP, the CPI for the whole Eurozone, which was shown to be above 2%, the GDP, which was shown to be as the same level as prior, and the year over here, this one was the core, so it excluded food and energetic. This one is the full CPI, which was much higher in general due to the volatility of food and the energetic sector. The GDP year over year, this one is the quarter over quarter, is 3.7, coming from an overall 14.3, and then it's better than expected, but still worse than prior. Then we had the official data of this core PCE, which was, this one was not the core, this one is the core, so excluded the volatile items, and came out better than expected and better than prior. Remember that in this period, we want to see the pressure of the inflation lowering. After that, okay, now it's working, and we had the Chicago Purchasing Managers Index and the Michigan Consumer Sentiment. Both came out positive, as you can see. So now we're going to sort of recall them, and we're going to see it on the day-to-day basis on gold, EuroDollar, and the dollar index. So consumer confidence, if I'm not mistaken, it was on Tuesday. Last week. There you go. It was this one. Much better than a prior, much better than expected. Exactly this one. So let's start with gold. As you can see here, we started off on Monday with a very nice bullish run above 1803. So we broke above this huge supply area that goes from 1795 to 1800, and then we broke above and we went to retest to make new highs at 1808, 1810. We sort of stalled, created a plateau over here, failing to make into new highs, coming into Tuesday, the day of as I told you, of the consumer data, which came out, consumer confidence came out at 4 p.m. at 2 p.m. my time, so at London and New York open, which was around here, exactly here. As you can see, due to the fact that the consumer confidence was high and was much higher than expected, much higher than prior, we had a very nice bullish run for the dollar, which translated, of course, on gold in a bearish run. We had an aggressive move down, a retest of 1800, and then another move down to revisit 1781.11. After that, of course, regular bounce, still failing to break the 1795 level and start of the demand, the supply area. We made a sort of double bottom, same previous lows, double bottom here and double bottom on the lower time frame. We're coming into Wednesday. Wednesday is the day of the durable goods, not something that usually okay. So no, this is not. And so this was right 4 p.m. So actually consumer confidence was priced in. No, because now, okay, because the time zone changed. So it came out at 3. Right? Yeah, at 3. Sorry guys for this mess. Yeah, it came out at 3, which is here. Okay, as you can see, perfect. Still makes sense. was not coming out, and New York Open was coming out at a new 4-hour candle, 3 p.m. You can see, yeah, with the new time zone, New York Open. Okay, but this is referred to the old one. Okay, so it's the same. The news came out, the report came out here, which gave the nice bearish move. On Wednesday, what we were seeing was what was on Wednesday, the durable good orders came out, and as you can see, it gave not much, didn't change much the outlook of a bullish gold. As you can see, during Wednesday, we had a nice, we were sort of in a range because we went down, we dipped down, and then went up. No, we only had major liquidity grab during New York Stock Exchange, and we come out on Thursday. Thursday is the day of the first PCE data and the, of course, jobless claims. The interest rate decision could have also, I think there was here the decision of the CAD, the central bank, Canadian central bank. Let's see, when was it? Because it affected the gold. CAD on Wednesday at 4 p.m. But this, I don't know which time. Yeah. Yeah, so on Wednesday, here exactly, we had, thank you, we had the interest rate decision for the for CAD. Here, as you can see, which they kept the rates the same, but they, as you can see, kept the rate the same, but during their press conference, they say that they were going to cut the stimulus to the Canadian. And this is, of course, has a much bigger impact on the dollar and globally on gold, but this gave this nice bearish move on gold on Wednesday afternoon. That's why we had this bearish move, because you know gold is bought in time crisis when the currency is devalued. Sorry. So that's why if the currency, like Canadian, is optimistic, is growing strength, then there's less demand for the gold, safe haven / precious metal. And on Thursday, we're going to see now how here, this was the London session, we were tapping 1803, and then we're coming towards the New York session, and we see that what we had was the core PCE, the same, the quarter-on-quarter it doesn't really matter, but was higher, so it's not good for the dollar, but the GDP price index looked good, and the jobless claims were good, but the GDP was much worse than expected, much worse than prior, 2% against 6.7% of the prior data. So that's why, as you can see, overall it's a whipsawing, because the bullish move is fueled by the worse GDP and the dollar weakness. The bearish move is fueled by the good jobless claims and and also the core PCE. This is the jobless claims. So it's a mixed data overall. But overall, I think that when you see that the investors digested the news, you see that price is not breaking above 1803 again, and that's why you start seeing a shift and a bearish move. And through Friday 29, you see the price breaks and retest 1795, the bottom of the huge supply area, and breaks down very, very bearish of more than 200 pips. And let's see, what did we have on Friday? We had the core PCE on the month over month, and we had the core PCE year over year, which is the most important one. And as I told you before, it was exactly as prior, was lower than expected. We also had positive PMI, positive consumer sentiment. So overall, this is a nice and bullish day for the dollar itself. And that's why you see this huge move happening on gold, more than 200 pips, 1795 to 1772 key levels, and then of course closing the week with a correction, around 50% correction of the move. Now, as you can see, we are reacting exactly at these previous lows of the start of the week. Makes sense? But here we are exactly reacting there. Is that below? Perfect. So this is of course reflected on the dollar index, as you can see, much less volatile than the gold, because as I explained in the fundamental video, the dollar index is built with a basket of currency pairs, and you know that the currency pairs are not as volatile as a precious metal like gold. So that's why you see here that price is sort of ranging. So we started the week here, we retested multiple times, and then we broke above, break and retest. But after that, this bullish move on Monday, as you can see, is the same. You see a bullish move on gold, which doesn't make sense. That's why I always say that doesn't always is not always perfect on the dot, the correlation between the two. After that, you see that the price is just ranging between these two PSAs, 93.9, 93.7. If you remember my daily analysis, I always said that the two make or break points were 93.7, 93.9 to look for breakouts or correction and breaks down. This is what happened only here on Thursday. We had so on Tuesday, here, as you can see, you have the consumer confidence overall sentiment very, very bullish due to what I explained you. And on this is Thursday. Overall, looks like that the dollar index was good due to the jobless claims, due to the core CP coming out. I really, to be honest, I bearish. So it's bearish, so that makes sense. So it's exactly for the reason that I told you, the GDP much worse, still high personal consumer consumption expenditure. Yes, the jobless claims were better, but were like 10,000 better, not like a lot. And that's why, as you can see, the dollar is very, very bearish and moved to below its previous lows, retesting the market structure, and it was 93.3. That's why the GDP growth was such a bad report, such bad figures that price came out, the dollar came out much beaten out of it. And as you can see, after that, we stayed in another block until Friday afternoon, where we had very good PCE, showing that there's no much increase in it, in the PCE slash inflation, which is a very, very bullish conference for the dollar. As you can see here, we go range to range, one full point in one day, and then we close off the week here. I think I can also, if I do like this, exactly, as you can see, this is exactly the same. This is in euro dollar, exactly the same. It's just on the reverse. I mean, there's almost no need to do anything because it's the same chart, same order block, and then when gold dollar pushes bearish, of course euro pushes bullish. Interest rate decision on Thursday. As you can see, the move on the dollar was much smaller than the move on the euro, because on Thursday we also had the monetary policy, which was fairly neutral and came out as expected, the interest rate decision, and so there was some fuel added by Lagarde and the optimism of the eurozone to the already weak dollar that it showed you. Then exactly the same order block being created, the same exact break and retest, and then continuation down. As you can see, this is exactly from here, exactly the same. That's why I always tell you that euro dollar in this specific moment is much the mirror of the dollar index. If this isn't crazy for you, to me it is. As you can see, it is exactly the opposite. Then we go on GbpJpy, which is still a risk currency against a safe haven. I don't know if we had any significant report for the GBP. It's like we didn't have any due to the fact that we don't have any report here. We only had through the week some Brexit report, Brexit headlines. Overall, from the mid of the week, after this bullish run between PSAs, as you can see, let's chart them up. You see very bullish action, reacting exactly the same point, 156.7 something, still maintaining bullish price action and bouncing off 156 to 100. You see that price is still making new higher highs. This is a very nice wedge being created after the price still is reacting again, 156.8, 156.2. Multiple, as you can see, multiple retests of 176.7. And then you see this is the wedge that is created. Then we have the squeeze out of the wedge, break and retest of 56.9 PSA. Again, break and retest of the PPRs, break and retest of 157.33, and then the last push to almost break on 57.8. After that, we have a huge correction. First is a 50% correction. After that, we have strength of the yen and overall some Brexit talks again on the tables. Brexit talks are almost always negative for the GBP because of brings uncertainty into the trade talks, uncertainty on the future outlook of the UK economy now that is split from the Eurozone. Still, at around the 55.8 finds some sort of support, makes into new highs. Still, as you can see, creates higher highs, higher lows. Again, sort of creates a small order block as it did here, as it did here, before squeezing up after this wedge. So getting messy. But you see that is a small order block, small consolidation into in a uptrend. Still, this order block with a flat candle body support that never breaks below, and it gives you further confidence for entering in the main bias, which is bullish, again. And again, you have a correction. Look where it reacts exactly at the lows of this bottom, and then we have another push to make into new highs. But as you can see, price is failing to break this huge supply area around the 57, and then aggressively corrects to again retest around the 55.8 price point, and we close off the week over there. As you can see, overall, also during the weekend, I shared some headlines. They are not so optimistic. Not so optimist Brexit talks. As you can see here, step back from the rhetoric actions, make solving differences more difficult. These words are not good. Launching dispute sentiment, concern, surprise. I hope it's not to help the world. I mean, these news are not good for the investors. So if the investors can, they will just, as you can see, many Brexit news through the week. Thursday, Wednesday, French world, Thursday, yeah. As you can see, the trade talks about the fishing something in the channel, Northern Ireland protocol. This is all bad. As you can see, this was Wednesday morning. Let's see if we had some headlines specifically London Open, or if it was just no, it was just for the current sentiment. But as you can see, through the week we had some negative news and headlines for the GBP. So let's close off with Bitcoin. Bitcoin, very interesting pair, very volatile. We started the week 160. Last week we played a lot of bounces from this demand area, 65, 60, 500, 60 flat. Yeah, and we got the bounce slightly above, but still, let me, as you can see from the PPLs, still giving you opportunity at the various PPLs. We broke and retested key level 61,700 or 61,750 PPL. Give you possibility to enter further buys above 62,500 to retest, as you can see, 63,750. We have a deeper correction, sort of 50%, no, less than 50% of the on move, and we have some bounces for like 25, 50 pips. A retest of those previous highs, another big bounce. But overall, you start identifying that each bounce is still lower and lower, as you can see here. Yes, we have a deeper pullback. We're still not breaking those previous price points. Another bounce, but this bounce is not making new highs. It's not breaking and making new highs. It's still creating new lower highs. each bounce. As you can see, one, this is the last high, we have lower high, lower high, lower high, lower high, and then we have the last lower high, which is exactly at the price point of interest, 62,500 ppl, and then we have the meltdown from there to where exactly to 60k flat. Yeah, like 1500 and 1575 to 225 pips, and then exactly stops there, and we have a bounce on the huge demand area. You can take buys, and it's still over 100 pips, but still failing to break above the key level, still failing to make into new highs. Therefore, still very, very bearish price action. Let me clean up this. Still very bearish price action. And a drop to 58,000, where we create a very order block, nice order block. We have break and retest of the order block of the PPL, and then still buys above this demand area, playing out, only to see a flash crash happening on Friday, which is retesting exactly 58, because the candle closed due to the spreads closed at 58,000. Huge spike up. I mean, this is really non-tradable. Is something, is a flash crash, is 500 pips move up and down in a few hours, I guess. Yeah, in 1 hour and 20 minutes. So not tradable. The spread is like 25-100 pips, as you can see. Candle close here, open here. There was like 25 or 30 pips of spreads. Still another bounce at 60,500, 60 to 50 this time. Still this huge demand area, another bounce. That's why I said that it's very volatile. You can take one of these buys, looks a very small move, but this is, if you count 25, 50, 100, 150, 175 pips move here. The same that was here. I mean, you don't have to catch the big 500 pips movement. Each bounce from your PSA is giving you more than enough pips for the whole week. Again, same price point. We have multiple occasions. We have the multiple taps of each, as you can see, each PPL. And then again, very aggressive bullish push. This time, as you can see, we are making new highs. We are still reacting here. So we are not breaking below the weekly highs. We are still failing to break, and that's why we're going to see a deeper correction. These buys, 50, 100, 200 pips move at the same price points of interest, staying in the same bias. This is the easiest one. This liquidity grab, you can, this flash crash, you can consider it a liquidity grab because it gets immediately bought up. That's why it was a liquidity grab of all the buy orders. After that, you see a deeper correction. You see these attempt failing to break again 62,750, failing to break into new highs, and then see, yeah, the confirmation of sellout. Of course, if you want to stick to your main bias, it's no worries. You are waiting for price points of interest. So where are the price points of interest for buys areas? If you are bullish in this, let me clean up a little bit the screen. Okay. Okay, let's do like this. Very good. So if you are bullish, where do you, and you see this price action, and you see that the price is reacting, you don't want to take counter trend sells, you are looking for buy areas. So you see, and you know that this is a huge demand area. It played out here, here, played out here, played out here. So you're looking for this area for the best buys, but also we are looking for this area. Look here, one rejection here, price sensitivity here. Looking for these areas or deeper here to see price bouncing up. You are only selling if you see a break below these price points. If you see a break below here, and especially a break below 60 flat, then you can consider sells. And then if you see, you stick to your main bias, you wait for your price point, you see a double bottom here at 67.50, you buy and it gives you 70 pips, 25, 50, 75, 100, 150 pips, sorry, 150 pips. After this double bottom, we have further entries. This key level, PPL, which is 61 to 50 for further confirmation. And you have your 120 pips, 160 pips of the lows. So you stick to your main bias, which was buys. You look for buys. You can also consider some some sells below this PSA. That's why, as scalpers, you can take buys and sells below here. If you see strong confirmation, break and retest of important PPLs, especially below here, you can take consideration sell, safe sells, but knowing that it might end up just till here, because you look at this huge price sensitivity area on the left. So not taking it, thinking that it will go below 58 for sure. But this is it, guys, for our daily recap and weekly recap. We saw the price action, we saw on the dollar, we saw the correlation with the USD, Euro USD, and we'll see you guys next time.